Time now for Options Corner. Joining us now to take a deeper look at this chart is Rick Ducat, lead market technician here on Schwab Network. All right, this has been an outperformer year to date compared to the S&P 500. What trends do you notice, Rick?
Yes, two pretty solid price target hikes here, and as you said, up 47% or so during the past year versus the S&P up about 13%, also strongly outperforming the overall tech sector. But when you look at the other cybersecurity companies as well, CrowdStrike is once again the standout. It kind of runs the gamut here. Zscaler, Checkpoint, Palo Alto, Fortinet, and Sentinel, all showing very a wide dispersion in their gains. But CrowdStrike, once again, the standout name in this field here. So when we do look at CrowdStrike's price activity more specifically, we can see that our upward sloping trend line here in blue has been broken shortly after we hit these highs of 566.90 here. From there, we've made a downward sloping channel between our two white dashed lines. We can see that there was some notable levels here right around 512 or so. That was where we saw some highs multiple times, then the subsequent lows, and now it's once again become a resistance point. So this could be one level to watch. Another thing to point out, possibly looking like a potential head and shoulders type setup here, where we have our two shoulders around that 512 level, and then 476 or so. That would be the neckline area where you might be looking for a potential breakdown here. So earnings can always throw those things for a loop, though, but just something to consider. We can see that our moving averages are clustered together. Our 521 and 63-day EMAs quite close, between about a 500 and 518 or so. So we can see that that suggests a slowing momentum, a bit of a stagnation in price activity here as the trend starts to slow a bit. We can also see when we look at the RSI, a matching characteristic here. However, now the RSI has broken its trend line here and is on the verge of crossing back above that 50 midline here that separates bearish from bullish momentum. So if you were to see a strong push back above this trend line and above these moving averages here, the bulls would want to see a corresponding push in the RSI above that 50 midline. So when we also were to look at our volume study here, we can see that volume profile shows the heavy trading concentration area is right here, kind of this range, a rather large pocket of activity here between about 570 to 510. So for now, shares are staying above this key area, this heavy trading area here. If we were to move lower, the next heavy volume area is down here, centered around 430 or so. That would be quite a ways off here. Finally, though, if we were to look at our expected move here for the end of this week, about a 7.7 potential expected move here in our orange box. We can also see that for the month of December, the monthly expiration here, about a 10.7% expected move. So that would line up pretty closely with that 455 level where we saw a gap back here. That was the high point before we had our gap up. So that would be a notable downside point to keep an eye on here. Meanwhile, the upper edge of our range pretty close to those highs near 566.90. So that would be where you might see things top out potentially.
All right, thank you, Rick. Now to take us through an example trade, we've got Tom White, senior options contributor, co-host of Fast Market. So, Tom, what's the approach for an example trade for CrowdStrike, given we've got some more conviction around this one?
Yeah, about 3 price target hikes today, and then a partnership or an integration announced with AWS. So if you think the stock's going to maybe go higher post earnings, so let's take advantage of that higher implied volatility option market. Pricing in about a plus or minus 6.5% move either way in the shares, or plus or minus $34. So I looked at something where I can take advantage of a higher probabilities of success, where I can be profitable if it goes higher, stays where it is, or even goes a little bit lower, but remains above a key break-even point. So we're out to the December 5th weekly options, really short-term positioning, 4 days to expiration. We're going to buy an unbalanced put butterfly, where we're actually going to collect a pretty hefty credit on this one. We're going to buy one of the 500 strike puts, sell 2 of the 495 strike puts, and then buy one of the 475 puts. You're going to collect a credit of roughly about $4.50. If the stock opens up here around $506, it is pulling back with the overall market. But if you collect that $4.50 credit, that's what you can make above $500 per share. You can see that. And then you get a kicker here right at the short strike, which is at the 495 level, where you sold 2 options on this one. Where it takes your break even down to is 485.50 to the downside here. That's where you start to lose money and you max out losses below that 475 strike. But you get that little kicker at the short strike. You got about a 4% cushion to the downside on this one. So if you believe these analysts, and it's not immune to market moves, this takes advantage of that moving higher, remaining where it is, or even going a little bit lower, but you want it to stay above 485.50.
Yeah, you had Dan Ives of Wedbush also reiterating their bullish view on CrowdStrike as well today. Thank you, Tom.